Good afternoon, students. In front of you is your tutor for Accounting Module 2. They call it DES. I'm Gertrude Namando. I'm welcoming you to 2019, and let it be a year of hard working and a year of obtaining our goals. Students, if you are committed, you will make it. If you have a vision, if you know what you want in life, you will make it. I'm now going to take you through the presentation of the examination. This presentation will cover, in the past, we used to have a different presentation for every examination, but now Iol has requested us only to have one presentation that covers the May, the August, and then the supplementary examination. Okay, allow me to take you through the content. Now, before I take you through the content, in your modules there are key verbs that you need to familiarize yourself with when it comes to answering any subject at IOL. I please want you to read through that. Okay, now the topic that we are starting with is a partnership. If we are now talking of partnership, we know it's a business that exists because of the partners that contributed different amount of money to start a business. And sometimes in such businesses, you find partners that agree to contribute half money. If the business needs 100,000 as a startup capital, if there are two partners, each of them, they need 1 million. If there are two partners, they both agree that each one give half, which is 500,000, 500,000 to have 1 million. But at the same time, you also find 3 or 4 partners that decide to join, but then each one will just give an amount of capital that they are having. And then now, when you are doing a partnership, on their profit now, it will not, everyone will get a share based on the amount that is contributed. So therefore it will not be equal. But for the partners that gave equal, they'll get equal share of what they contributed. Now students, it's very much important that if you are given a partnership account, you must look at the formula. You must look at the ratio. Each partner, how much did they contribute? Because the moment you fail to look at this, your answers will be wrong. Your answers will, even if you use a correct formula, your answer will be wrong because you did not consider how much each partner contributed. Okay, now the partnership will follow exactly the same procedures, except that an extra account is required after the preparation of the profit and loss account and income statement. Now this is called the profit and loss appropriation account, and then it shows how the net profit is shared out between the partners. Like I said, the net profit will depend on the capital that is now contributed by each partner. Now first of all, we must add to the net profit. We need to transfer from the net profit and loss account any interest that is charged on drawings, so increasing the amount available to be shared out. We must then deduct any appropriation required by the partnership agreement for the interest on capital and partnership salaries. The remaining profit must then be shared out in the agreed ratio. This is now just in an explanation of what I indicated earlier. And then when you are doing the balance sheet of the partnership account, it's done exactly the same way as the other balance sheet, but except that the capital has to be modified to show the capital and the current balance of each partner. So here now you are modifying the capital. It's not just one capital, but remember, you are modifying it because you have different partners, and then each partner contributed money. So furthermore, I want you to read the module 2 of accounting chapter 1. Module 2 is the NAMCOL module that is prescribed. And then the next account that I want you to know is the goodwill account when it comes to this partnership. Now, the goodwill account, if we have to define it, is the amount of capital to be invested by each partner. So how much capital is each partner investing? The student must draw up this book, and when they are drawing up this book, they must use a T account. I'm sure by now every accounting student knows what a T account is. And then now you must indicate on the good how much each partner have contributed. And then account must be balanced. So a goodwill account, we are indicating the amount invested by each partner. And remember to balance it off. Again, read your module 2. And then the capital account. Now this one usually shows only the amount that is invested by partner. Here we are now no longer when you look at the term capital, don't now look at the amount that is contributed by the owner, but here we want to know how much is invested by the partner. Now, items such as interest on capital, partner salary, profit share, drawing, and interest on drawing are recorded in the partner's current account. So the capital account must be done in the T format account, and this one must also be balanced. So read further on this account on page 7 of module 2 of the NAMCOL booklet. And then I also want us to look at the manufacturing account. Now the manufacturing account has to do with the businesses that are now turning goods. They turn raw material into finished or unfinished good. Sometimes we even say they process goods. And when they process, we are talking of raw material that is being processed. And then the manufacturing businesses, they have different stages of production. There are different stages of production. And then the cost of the raw material used in the first item shown in the manufacturing account is calculated as follows. Now, students, when it comes to a manufacturing account, I want you to memorize these formulas by heart. If you don't know these formulas by heart, it would be very difficult for you to do what? To calculate a manufacturing account. Now, what are the formulas? The cost of raw material used. As a business, how do they get the cost of raw material that is used? Is now when they take the opening inventory of raw material, they add the purchases of raw material, and then they less, or we say they subtract, the closing inventory of raw material. So that is now the formula that you need to know to calculate the cost of raw material that is used. And then the prime cost. How do you get the prime cost? Is when you take the raw material, you add the direct labor, you add the direct cost, what you get is the prime cost. And then the cost of production. how do you get the total cost of your production that was incurred in your manufacturing account? Now this is when you take the direct material, and then you add the direct labor, and then you add the direct expenses. Now in here you get the prime cost, and then that means on the prime cost you just add the factory overhead, and then it will give you the cost of production. So those formulas, it's very important that you know those formulas when it comes to manufacturing account. And then I want you again to read through page 291 to 297 on the accounting didactics. Now that is now for you to get the format of the manufacturing account. And then students with accounting is about knowing your format. If I may even put it, it's even about summarizing. You summarize your format, because when you know the format in the examination, what do? They give you figures, you use the same format just to put figures. So I want you to read through that. And the next book that you need to know is the trial balance. Now the trial balance there, when you have done the general ledger, what do? You now post it on the trial balance as it is in because the double entry was already completed in the general ledger. Now you just take the account. If it's on the debit side, you bring it on the debit side. If it's on the credit side, you need to bring it on the credit side. However, keeping in mind that also in the trial balance, we have the balance sheet account section, we have the nominal account section. Know which accounts are falling in the balance sheet and which ones are falling in the nominal account section. And then when you carry the things as they are, you add it up. If they balance, that means your posting was correct. But if they don't add up, that means there was an error somewhere that is made. And I want you to read through page 168 and 169 to find out on these errors. And the next topic is the cash budget. Now, as the product are being sold, the cash will come in the business. As the product are being made, if you are creating a product, spending cash will be made. So that means we have cash that is going out of the business. So that means the sales and the production budget will both have an influence on the cash flow of the business. And it's very important from the side of the management of the business. You want to draw up a cash budget because you want to know how is the money flowing in your business. Do you have a lot of money that is flowing in the business? If you have a lot of money that is flowing in the business, to a business it's a good thing. But now, if you have a lot of money that is flowing out of the business, it's a problem, because you might even experience what? A cash outflow problem. And then when management or the people responsible for the books, when they are drawing up the cash budget, the negative numbers, they are shown in the brackets. If you see a figure and it's in brackets, that means it's negative. And then all the credit sales of the previous month, if there were credit sales from the credit customers for the previous month, on the next month, that will become the receipt of the next month. Because you assume that what? The customers, they owe money to the business. By the end of the month, the business receive money as the customers are coming in to pay their debts. And then all the credit purchases must be paid within the month, so that figures are shown as creditors for the following month. So that means now when the business go out and then they buy goods on credit, now it's very important also now that what? When they go and pay, now you reduce because you no longer owe anyone. Now the total receipts less total payment, it will give you a net receipt or a net payment. And the balances that are brought down will be added to the net receipt to get the balance carried down. And then only the balances carried down become the balances for the brought down. This is just the same as balancing, we know. The balance brought down is coming on the bigger side, and then the carried down is coming on the smaller side because you want them to add up. And then only cash item will be reflected in the cash budget. That means account like depreciation will not appear in the cash budget. Here you are only working with cash transaction. And then when you do a cash budget, allow some space at receipt and payment in cases where you might have overlooked at one of the account, and then you have a space where you are coming to insert that amount. And beside from the given topics, what I want you to look at, if the question is having 5 marks or more, that means you need to write anything that you know about that topic if you want to earn marks. The mark allocation must guide you as to the content that you are answering. The student must please avoid leaving questions blank. Read through your modules. People, if you read through your modules, there is no way you are going to leave a question blank. And then I want the students to read through the income statement. I want the students to know how to complete the double entry principle. These are general things in accounting. I want students to read through the general ledger, that is now the posting. I want students to go through the bad debts and then the provision. Read through the income and expenditure, the balance sheet. And NB, please read through your whole syllabus. Read through your whole syllabus for you to be able to write an examination. And please, students, don't wait and study that week before the examination. The right time to start reading the module is now. And then with accounting, you need to practice. Practice make perfect. That is the only way, students, that you will master the accounting. And please, I repeat, you will find students that are calling you or they are sending you an email to ask, now can you send us the May presentation? Can you send us the August? This presentation, students, I repeat, it covers May, August, and supplementary examination. So to be on the safe side, go through all this content, because I will pick some for May examination, some for August, or you even find the question paper that you find all these topics. Students, where there is a will, there is a way. I'm wishing you all the best in your career journey. I thank you.